Welcome. I'm Ira Epstein, and I'd like to discuss what happened at the September 18th FOMC meeting and the implications that it has going forward for interest rate policy in the United States, which affects interest rate policies around the globe. First, the Fed made a change and it went 50 basis points of a cut. That was against what many analysts thought would happen because the real thinking was that the Fed would go, by analysts at least, 25 basis points to show that they're still staying with the balance of data and not getting away from that. Well, by going 50, in part, they said they're going away and they're forward thinking at this point, or are they? Because when asked a question about had they had the big revisions to the jobs report in their hand before the July FOMC meeting, what would they have done? Would they have voted to hold pat, or would they have gone for a vote that said, let's go 25 basis points? We didn't get a straight answer on that. So you're going to hear the word recalibrate, you're going to hear the word catch up, and that's basically what the Fed did in both accounts, in my opinion. Next was the vote unanimous, because most of the time they are for a very long time, and it was not. Governor Michelle Bowman was against it. So dissension showed itself for the first time. We then go, what does the Fed think for the end of the year in jobless rate? We're 4.2% now. They think you're going to be 4.4. So they think the jobs market's going to weaken, yet we saw today's U.S. jobless claims. Today I'm recording on the 19th. They were down sharply for both continuing and initial claims. So we've got a market there that is showing resilience still. The dot plot, because that came out at this meeting, another one will come out in December, shows that members think that the median rate by the end of 2024, and the word is median, will be 4.4%. Well, you're 4.75 right now. So because it's median, you can afford to fall a little bit beyond that and still get to this number. But here's where it gets real interesting. When the members came out with their dot plot, they looked for 3.4% in 2025. That's only another 100 basis points. Well, what do you have? About 10 Fed meetings a year? So that means you're going to automatically get some meetings that pause, that don't get aggressive to the downside if this projection holds up. And of course, these projections are not laid in stone. They can change all the time. And then they're looking for another 50 basis points by the end of 2026. Members think that they will still reach their goal of 2% inflation. But remember, this gets tricky now. When you cut interest rates, and they're doing that for the labor market, they say, because it is weakening, and they see that, and they believe inflation is embedded. Well, at what point does the lag factor, once you begin cutting rates, start honing in, and people have more money to buy things, they buy them, and you start cushioning that decline you've had in inflation, and it starts going back up? And the one area that we know that there's still a very big problem, and you've got to pay attention to it, is housing. Housing is going to remain in short supply, as I see it, through all of 2025. Mortgage rates today, the 19th, fell down, according to Freddie Mac, for the first time, 6.09%. So they're just shy of getting under 6%. That, to me, is a magic number. The problem is, year over year, home prices for the month of September are climbing. August, they're climbing. So every month we look, we get a 2, 3, 4% increase. You can get a better mortgage will you qualify for the loan. And I say that because it affects all forms of housing. And if shelter costs stay up, and they're a heavy weight in the CPI and the like, that presents the Fed with a problem. So what they're going to do is they're going to be doing this the whole time, looking over both shoulders. Where's inflation as they keep cutting interest rates to support labor, and try to juggle that act. So far, they're great on what they've done, an A+. Will it stay that way? Take a look here. If you'd like to see our not only comments, but how we recommend trades and the like, we do so, and let me show you how. If you go to our website, which is www.iraepstein.com, you'll come to this page. And when you do so, all you've got to do is hit research, choose the programs that you'd like to join with us, and this is how you get in and see what I'm doing in the morning, when I'm doing it, and a lot more information. Our free offers are right here. If you give this a click, you're going to get into an area here that's full of free offers. You just click on the offers you want, go in, choose them like you're seeing me show you right here, and what takes place is when you're through, it'll ask you to sign up for that, and we'll take it the rest of the way. So there's a lot for us to offer to you. I think you'll see the reasons that people come to us for research and trading. We hope you join us. I'm Ira Epstein. Have a good one.